Hi there, my name's Jonathan and today I'm going to be speaking to you about first time buyer mortgages and how we can help you here at Trinity Finance. So a mortgage is a loan offered by a lender to enable you to buy your first home. The mortgage itself is normally taken over a 25-year period or a 30-year period, and then within that you will choose a mortgage product that might be fixed for 2 years or 5 years and give you a sort of discounted interest rate for that period of time. After that you would go on to the lender's standard interest rate, but there are options to either remortgage or to switch products with the same lender so that you can stay on a good interest rate in the future. The lender will take into account your income and your outgoings and your credit history to look at your affordability when they decide how much they might be prepared to lend. So as I was saying earlier, a mortgage loan can be taken over a number of years, and generally this is sort of 25 years or 30-year term. You can take shorter terms of 10 or 15 years, or you can take longer terms, 30 or 35 years, depending upon your age and when you're likely to retire. The longer you take the term for, the lower the monthly payments will be in the beginning, but the more interest you will pay back over the whole course of the loan. So the shorter the term, the less interest you pay back during that period. It's important to work out your budget when you're thinking about the term, so think about what your ideal monthly payment might be, allow some room in there for protecting the mortgage and protecting the property, and then you can fit the term around your budget, and that's the starting point. So unless you've got substantial savings or inheritance or a large gift from family members, it's likely you're going to need a mortgage in order to buy your first home and to bridge that gap between your deposit and the purchase price. It is possible to put forward funds for your deposit from your own savings, from a gift from a family member. Some lenders will even allow you to have a gift from a friend, and that's something that we can help advise you on here at Trinity Finance. In terms of the amount of deposit you need, 5% is generally the starting point. So if you look at the purchase price of the house that you're looking at, 5% of that is what you would need as a minimum deposit. If you can get that to 10%, then you tend to get better interest rates. So you get lower interest rates, lower monthly payments, and sometimes you can actually borrow more money by increasing the size of that deposit. But again, that's something that we can review with you here. We can go through what your potential deposit is and then look at the options to find the best one to suit you. So the question that we're commonly asked at the beginning of the process is, will I get a mortgage? There's a lot of different variables involved in that process before you can get that mortgage offer from a lender, but one of the key places you can start is by having a good idea and knowledge about your credit history. So if you get a copy of your credit report, and you can see on there whether there's likely to be any issues, any missed payments, any outstanding debts. If you provide us with a copy of that report, we can then advise you as well on the best options. So important things to bear in mind are you need to keep up your credit commitments. If you've got loans, credit cards, hire purchase agreements, make sure that you're making those payments on time and you're not missing them, because that can impact on your ability to get a mortgage in the future. In terms of debt, if you've got debt that you can repay, it's always a good idea to do that. And it's also a good idea to have some access to debt in order to improve your credit score. So if you have no credit cards, for example, then sometimes it can help to take one out and use it and pay the balance off every month, just to show the lenders that you can maintain a credit agreement. So at Trinity Finance, we're here to help you through the process from start to finish. So we'll have an initial appointment together. We can go through your affordability, have a look at the mortgage options, give you an idea of the interest rates and the monthly payments, and work out a plan together of what might be a suitable loan amount for you based on your budget, and have a look at the potential properties that you might be thinking of buying. And we will then stay with you through the process, so we can help you make offers on properties. We can then help you with the full mortgage application and submit that for you, and do all the work with the lender to ensure that the financial side of buying the property is dealt with and that you don't have to worry about it, and then you can concentrate on the more interesting things, which is planning for life in your new home.